So let's have a look at asset allocation. Now, certainly, we know it's something that's very important in the overall investment outcome. How do you guys think about asset allocation? And what are those sort of key metrics or outcomes that you'd be looking to achieve in asset allocation?
So asset allocation for us refers to just getting the mix right between which asset classes to hold in which proportion in a portfolio in order to get to a specific outcome over a period of time. And so, for example, an investor who's interested in growth, in a capital growth kind of outcome, and perhaps has a longer term time horizon and can stomach a little bit of volatility, that investor would tend to have a larger kind of weighting in equities, just being the sort of growth asset class that it is. But our sort of general take on asset allocation, acknowledging firstly that strategic element to it, which is the long-term equilibrium level of equities, bonds, cash, etc., versus the tactical element, which is the more short-term taking advantage of mispricings and opportunities in the market. We tend to have a very kind of low action approach. And by that, what I mean is that we aren't very active when it comes to making asset allocation tilts in a portfolio. We tend to aim to really get the big calls right when it comes to tactical asset allocation. And so what that typically implies is 2 or 3 asset allocation tilts in a portfolio during the course of the year. And around that, we've obviously built a very structured asset allocation process, which focuses on different metrics. We've got 3 key metrics that we look at, which is valuations, the macro cycle, as well as price action and price momentum. And all of those come together where the portfolio construction committee debates issues very, very hotly. And then we come together through a kind of a consensus outcome in deciding whether to be overweight or underweight a particular asset class.
Thanks, Riza. You know, within tactical asset allocation, really, you are using 3 key factors in that process. So you're certainly looking at the valuation, you're looking at the macroeconomic or thematic environment for the asset class, and then you're also looking at momentum or price action. Can you maybe give us a sense of how that all comes together as you formulate your tactical positioning?
So you've made a very important distinction there, which is between strategic and tactical asset allocation. In terms of tactical asset allocation, we've got a very structured process which we follow. And in doing that, we look at 3 different and very important pillars. The first one being valuations, as I mentioned. And taking the equity asset class as an example, maybe I can just kind of delve into it. But if we look at equities in terms of from a valuation perspective, the important thing there is looking at price to earnings ratios, let's say for the market, for example, the All-Share Index. And so looking at valuations for the market relative to its own long-term history, for example. And it's important because starting valuations really determine your long-term performance over time. But valuations on their own are not enough of a signal. One, they're a very poor timing tool. And the second leg of our process is really to look at the macroeconomic cycle. And so in order to do that, we look at things in the equity context like GDP growth, potential GDP growth, how that feeds into inflation as well as interest rate policy. And so we really try to look at whether the macroeconomic backdrop is positive or negative for the asset class. And then lastly, from a price action perspective, it really comes down to, is there an identifiable trend in place in terms of price action, knowing, of course, that trends tend to persist. And so what we tend to look at in that case is looking at the rates of change of various price indices, looking at moving averages to establishing a trend. Is the index making new highs or new lows? And so those are really the 3 key elements that we look at. Those then come together, and then we decide to either go overweight or underweight a specific asset class.
Thanks, Riza. I think that was a very good explanation of how you think about asset allocation. I think certainly what we see is the strategic asset allocation is the anchor or the rudder in terms of the long-term returns on the portfolio. But we've also got good context for how we are active in asset allocation through tactical asset allocation. as well as getting a good understanding of what are those key metrics that we look at to formulate our tactical asset allocation views. Thanks so much for your time.